Welcome back. The latest U.S. jobs report is showing a slowdown in the labor market. And according to the Labor Department, the U.S. added 22,000 jobs in August, well below economic experts' prediction of up to 75,000. Last month's jobs report was the first since President Donald Trump fired the Bureau of Labor Statistics Commissioner last month. The report likely signals an interest rate cut is coming from the Federal Reserve during its next month later this month. So join us now to talk more about what all this means and the latest job report numbers is the president and CEO of Wilsey Asset Management, Brent Wilsey. Good to see you, Brent. Welcome back.
Well, good to be back. Thanks for having me.
Of course. Are you surprised to hear this report that the job market, the labor market is slowing?
No, not really. And there's a lot of data backing up what is going on. And again, they expected 75,000, got 22,000 jobs. There were some surprises in there. Like this, the good jobs were the healthcare, the service sector. They created about 50,000 jobs. But what's surprising on the downside was professional services. They were down about 17,000 jobs. Manufacturing, which we hear all this good thing about manufacturing, down 12,000.
Why do you think it's down?
It's because of what's going on with the tariffs. I mean, we have the tariffs, and as a business person, you want to plan for what's going to go on, but you need good data. And we had the tariffs, like, okay, we can count on that. Then all of a sudden, now we got these going to courts. Now they're in the legal system. Well, we're going to have tariffs? We're not going to have tariffs? So what's going on is that there's actually about 7.2 million jobs that are open from businesses, but they don't want to fulfill them yet because they don't want to hire somebody, and then a month later have to fire them because things change. So that's what's gumming up the system. There's the jobs there, but employers are kind of frozen.
Well, this is kind of critical for the holiday season as well. They need to fill these jobs.
They really do. And the thing, too, I got to say, there's some people that just don't want to work. We looked at some numbers, and about 25% of the unemployed, about 1.9 million, they've been unemployed for almost 6 months. And the jobs are there, but they're kind of picky. They might say, well, I don't want to take that job. I'll wait for something else. And what worries me as an investment advisor is I think they're living off maybe their 401k from their last job they had. They think they have money, but that's your retirement. You shouldn't touch that. So you should get another job. May not be the job you want, but don't be spending your retirement or your savings because things could get worse before they get better.
Yeah, let's go back to what you were saying. You and I were having a discussion too. I have a couple of friends that work in corporate for a large retailer in the county, and they had said they see a huge change right now as far as trying to hire. The jobs are there. And like, as you said, some people don't want to work. But why is that when the jobs are there and they can make great money?
I think part of it is we got a little bit used during COVID. Some people got used to, like, well, they're going to give me money. They're going to give me this. And it kind of changed the mentality of some people. I mean, back many years ago, it's like, well, if I work hard, I'll get paid well. Now it's like, no, I'm the employee. You need to cater to me. You need to give me, let me work at home. You need to give me this and that. So it's a different mentality because things have been so good. And so now for the employer, it's hard to find somebody for a reasonable wage that will work hard for you.
So what can happen to improve this labor market?
Well, we need to get past these tariffs. I mean, the tariffs need to either come on or be taken off, and I hope they'll stay. But businesses need to know what's going to happen as far as that goes. So once that happens, we got certain information, then I think you'll see the hiring go back up again because businesses will say, okay, now I need people. Maybe I can pay a little bit more because I'm certain. The other thing we want to be careful of is that we do have next week is when the Fed meets, and that's another problem. I mean, they meet on Wednesday. Could they cut points a quarter, a half? Will they cut? I mean, we got on Wednesday, we got the CPI report coming out, and that's inflation. If that's bad, maybe they won't cut. So there's so many factors out there. It's very confusing. I mean, every day I pick up the paper in the Wall Street Journal, read something like, oh, that's something new. So it's very confusing for businesses and tough labor market because you're right. Some people, they want to get paid a lot more and not work that hard.
Well, you working in finance and business, I'm sure this probably crosses your mind wondering, okay, with everything getting more expensive, how are people doing it when they're not willing to work extra hard to get that money,
You know, and Bank of America came out with a survey of their 70 million customers, or the 70 million accounts, and they saw that people are spending more, they're actually doing more, they're paying down credit cards, so they're doing it. But I'm concerned that they're taking out of their investments, they're taking out of their retirement accounts, which is not the right direction to go. You should be actually building that because I do worry about people, and I've seen this. People get to retirement and they go, I don't have enough for retirement, what am I going to do? And I go, well, you're 65, you got to work maybe another 5, 10 years. And that's not what they want to hear. So never, ever touch your retirement, your savings, because retirement it's tough being old, but being old and broke is not a good thing.
I was actually just talking about this with Logan before the show, too, about retirement and savings and cashing out and doing all those things. But we would love to have you back, Brent. Great discussion. Sure. Always good to see you. Thank you so much.
You're welcome. Thank you.
Of course. All right, now let's head over to